Welcome to Tech Talk Tuesday. I'm your host, Carla, and with me is my fellow co host, NCMT David Blake. It's Monday, September 30th, 2024, and it was a pretty good week in the stock market last week, especially towards the end of the week. And we have some important things to look at moving forward. We do it mostly from a technical perspective. David, I hope that you had a great weekend. How are you doing today?
I'm doing well. Thank you. Thanks for asking. How about you?
I'm doing well too. Not bad for a Monday. Let's get started by taking a look at last week's market activity.
Well, as you mentioned, we did have a slow start to the week last week, and then it kind of kicked into gear, rolling towards the end. And we had three factors that actually benefited stock market. We had global markets, rallied to some of them to different fresh highs after China affirmed the stimulus measures for its economy. That's been a big boom for the Chinese market. In fact, today, Monday, as we're doing this, I think the Shanghai index was up another 6 or 7% today alone. So these stocks like Alibaba and JD.com, so those stocks, if you look at them, they've really had a big move over the last week or so, and probably very overbought. At least something you want to chase, probably not. But I do think that they pull back. It's interesting what China wants to do. But besides that, then we had the Swiss central bank also. It started to cut interest rates. That was a good sign for the stocks. And then we had more dovish comments from the European Central Bank, which, with all these together, should spark some more global growth for the different economies. Here in the States, finally on Friday, we got the August PCE, and that showed once again that inflation seems to be pretty tame. That gives the Federal Reserve more room to move towards the end of the year, maybe in November and December, to do another rate cut or two. We did have a rally off of that. It was kind of strange. We actually kind of came back down, and then we rallied again to the new highs on the Dow Jones, NYSE, and S&P 500. Everyone seems to be risk on, and then we had a little bit of a pullback here on Friday afternoon, going into the weekend. I think that was probably a little bit more towards the last couple of days of the month. You do get a little bit of window dressing. Nothing big. I mean, the Dow Jones did finish on Friday at a new high, but you did have a little bit of churning sideways. Part of that I mentioned was in the market being overbought. You had the SRO, the Market Edge, and S&P short range oscillator getting up over 7 a couple of times last week. When it does that, that just means that the market is very overbought, and you're going to get some institutional players that probably try to put on some hedges, that type of thing, or maybe go short or go long some of the short ETFs, that type of thing. We get overbought, but I kind of expect that to follow through this week. Some sideways trading and some consolidation. And in fact, today, Monday, we're trading mixed. We have a little bit of pullback in the Dow, but the Nasdaq's kind of holding up even, and Russell 2000's up a little bit.
Okay, and which sectors of the market were the laggards and which ones were the leaders?
Far as the sectors go, everything was mostly higher last week. The only ones that weren't were energy and financials. They were in the red. The energy sector has had a little bit of a struggle. You've got crude oil prices dropping down below $70 a barrel, and that's basically because Saudi Arabia said that they're going to. They've got kind of had a target price out there for a while, saying they wanted crude oil prices to hit around 85, 90, something like that. And they took that off the table and decided they're going to boost their oil production going forward. Why? That may just be because they want to get more oil out before something happens in the Middle East and they can't get stuff out, possibly. I don't know. But that's probably going to keep a lid on oil for a little bit, somewhere here around 68, 72, somewhere around that area. Another bright spot was gold. It actually traded above $2,700 an ounce for a while. It settled at 26.74. I think we're down a couple bucks again today, but gold has increased more than 30% year to date, and it still looks fine on the charts. A little bit overextended, as long as interest rates are coming back and we have some problems in the Middle East. Gold's probably something you can hold on to if you have it. So anyway, we had rates little change last week. After that half a point cut the previous week, we're still looking at maybe it's about a 50-50 shot of another 50 point or half point cut in November. I don't know. We'll have to see what we get this week with the jobs data, because that's the second mandate for the Federal Reserve. And as they have inflation kind of under control, they'll really be focusing now on this week's jobs data.
Okay, and how is the technical condition of the market doing?
Far as the technical condition of the market goes, everything still looks fine to me. I mean, you have MACD and momentum indicators are still bullish. A little bit of negative divergence in the 14-day RSI. That goes along with the market being overbought. A lot of times when it gets overbought, you want to see the 14-day RSI making new highs as the market's making new highs. Not seeing that yet. That may be because of the pullback that we had here a couple weeks ago. Maybe just trying to catch up with that. So we'll have to kind of keep an eye on that. One of the indexes that we follow that actually showed some improvement finally last week, we had the semiconductor index going into a bear market here in 1st of August, the July to August sell-off. It was down like 23%. And then we've had a kind of a bounce back in that, led by NVIDIA and some of the other ones. Some of the AI stocks, semiconductor stocks have done pretty well over the last couple of weeks. And we actually finally saw it on Thursday of last week. That index gapped up above its 100-day moving average, which was the last moving average resistance level that needed to get above. And that also coincided with a 61.8% retracement of that July-August sell-off. That's pretty strong. We are down on the semiconductors today a little bit, but I did notice that today's pullback brought that index back down to the 100-day moving average. We'll kind of watch that area right in there. You don't want to see it crack through there like a knife cutting through butter and that. But we'll see if it can hold up in that area. If it does, you should get a little bit of a bounce off that. A lot of times when you see a breakout or a gap up above resistance level, you'll see an index or a stock come back down, fill that gap, and maybe come back down to that resistance or support level, and then retrace that and then bounce off of there as people realize that it's going to hold and it's the breakouts for real. Let's see. We also had the Dow Jones Transportation Index, which had actually kind of broken out 2 weeks ago. And then FedEx came out with their earnings last week, and it took a nosedive and pulled the transports way back down. It started to bounce back. It's up again today. And if we can see that trade above 16,450, that would represent a bullish point figure double top for the index. That would benefit the broader market. Just the fact that you like to see the small caps of the transports kind of leading the way here, and that would be a nice boost for the market, I think, in general.
And how is the underlying market breadth doing?
Market breadth was fine. We had the NYSE advanced decline line hit another all-time high on Friday. Traders consider that leading indicator for market direction, so that's very bullish. Nasdaq AD line is near a 3-month high. It's not as important as the NYSE because you have a lot of junk stocks in Nasdaq. But again, it's hitting a 3-month high, and then we have some nice expansion we've gotten over the last 2 weeks in the number of new highs versus new lows. So that's good. As usual, as once some of these sentiment indicators that we look at, I had mentioned the previous week that once they'd come in before you had the rate cut, and you did get a nice little bounce in those. The American Association of Individual Investors saw retail bulls jump up again about 10 percentage points, and bulls outnumber the bears again about 2-1. That's a sign that you're getting a little frothy again. Then you also had the hedge fund managers, the active investment managers. They pretty much are staying almost fully invested. They're at around a 86-87% invested in equities. I think that's a good level for them. They like to keep that way. They have some funds that they can, if you do get like a 1-day pull off or something, they can put some more money to work with that. So we kind of want to watch that. Market does look good in here to me going forward for another couple of weeks. Got through September. Surprisingly, I think we're going to end the month up for the major averages. Usually September is kind of a rough month. October kind of can start out a little bit choppy. I just want to mention that I do think that you're probably going to have a kind of a choppy October. This week, I don't expect a lot until towards the end of maybe till Wednesday or Thursday or Friday. That's when we start to get some jobs data coming in. Tomorrow we have the JOLTS coming out. JOLTS is the job openings. And right now they're looking for that. Probably coming around 7.7 million job openings. And that down from 12.2 million job openings back in March of 22. That was the peak. And right now we have about 1.07 job openings for every unemployed person. And that's actually the lowest ratio since May 2021. So You want to see the job openings, stay more than what we have currently working. And then we have on that same day tomorrow, we get the ISM manufacturing and services purchasing managers indexes. The manufacturing side, we're probably going to still stay in contraction. Services side has stayed, in a growing mode going back for a while. That looks like it could come in on Thursday around 51.5. So we'll keep an eye on that. And then Friday, the big number, that's the Bureau of Labor Statistics that comes in. And we're looking somewhere for an increase of about 145,000 on farm payrolls. That would be up about 3,000 from August. And we're expecting the unemployment rate to stay around 4.2%. The market would like that number, something like that. Now, remember, we are down from around 225, close to 250 for the first half of the year. So the job market is slowing down. And the fact that it is slowing down, you don't want to see a big drop off where all of a sudden you're only down like the 70 or 80,000 jobs created. You don't want to see that. That would mean that we're probably, you'd probably see the market sell off on something like that. That would mean that the Federal Reserve was a little bit slow on their cutting. They should have cut maybe in July. But as long as we stay above, say, 125, 130, I think the market should be fine with that. If we are around that level, that probably would have increased the odds that we could get a half a point rate cut in November. So that's what you have to look forward to this week. We'll see how the market goes from there, but look for some choppy trading here over the first couple of days of the week.
Okay, well that's helpful to know what to look out for. You mentioned that the Dow Jones Transportation Index is set up for a double top breakout. Can we take a look at the point and figure chart for that?
Yeah, pull up IYT. That's the ETF for the transports. Okay. Okay, now over here on the right side of the menu, we have this P&F chart. Let's go ahead and click on that.
Mhm.
Okay, here you have the series of X's and O's. X is when the stock of the index is going up. O is when you have a reversal and it's going down. Now, as you can see over here on these two X's over here on the side, if we trade above that X, which would be around 69 and a half, 69.50 on the IYT. If we trade above that, you're going to get another X, and that would represent a breakout, a double top breakout on the transportation index, and that would be a bullish sign, which means the next resistance would be where the next X's go. It was back in March, I believe. If you see the numbers right below where your cursor is, you see that number 9. Not all point and figure charts do this because they're not really based on time. There's not a time element in that, in the fact that, it could not move if the thing trades between, say, 65 and 69. We actually put a number in there, and those numbers represent the month of the year. So 9 shows that in September, we got up here close to that 69 level. You look over there up the top of 71, you see that a 3 across there. That means that we were hitting a new high in the transports in March. So that we actually give you a little bit of a time element on the point and figure charts. And these are actually something to look at when you're looking to buy a stock or get more involved in the market. And the reason being is because point and figure charts are basically a pure supply and demand type of chart. That's all it looks at. If there's strong demand, things you'll be in a series of X's. If you have an overwhelming supply, then you're going to have a reversal and start going down. But when you look at these things, if you're thinking about buying something in here in the transports, if some people will buy the breakout, that means because it could come up with this if it trades the 69.40, 69.30, it could trade like that for 3 months. You may not want to be in it then, but once it does do the breakout, you'll get that X above there, and a lot of people will buy the breakouts, and so they're not involved in the stock or index until they get the breakout, then they go in. One of the things we have also on here, click on advanced tools, because if you're not using point and figure charts, you should be looking at them, at least making a buy or a sell on a stock. And we have something that's called point and figure early alerts. And what we do on this is something that's pretty neat. It's I don't know where else you're going to find them. Click on the alert buy signals. What we do is you have all these some traders that like to buy the breakouts, like I just told you. Well, we're going to go a step beyond that and help you out. And what we're going to try to do is we're going to give you the stocks that are they're about to break out. They haven't broken out yet, but you can put them on a list, and we'll actually give you the breakout price to boot. And that way you can put your ticket in ahead at the breakout price. So when you do see it break out, you buy the breakout into things. So you're front running all these point and figure chartists that actually go in there. Click on the formation for a minute. Okay, here's a list of double top stocks that if they do this, Deutsche Bank trades at 1750. That means it's going to be breaking out of a double top. And that allows you can put your ticket in to buy it at 1750. If it hits that, you go long the stock. If it takes 3 weeks before it breaks out, you're not in it. You're not going to buy the stock until you actually get the breakout. Now, if you click on the power rating over here, also click on that again. Okay, now this is kind of neat to look also. So if you're looking at something to buy, this power rating shows you that not only are you as a stock coming up to where it's going to have a point and figure breakout, you're actually going into that breakout with a lot of momentum behind it. The power rating has looks at a lot of different things. It's kind of a momentum index of our own. And in this case, this SHD, Goosehead Insurance, you may want to look at the volume because I've never heard of this thing. But a quadruple top means that this stock has gotten up to around 92 4 times. There you go. You look at that. Every time it gets up to this 90 level, it can't get through it. So you sit on the sideline. But if you go ahead and put your ticket in here at 92, all of a sudden, boy, all this resistance, all these people that have been short in the stock at 92 are going to go back and buy the thing. You're getting a quadruple top breakout, which is actually very rare, to tell you the truth. You don't see those very often, and that would be something you may want to look at. If it breaks through that, you're probably going to get a nice little pop on there. Click that formation thing again, the top there again. But here you can get the triple tops. Again, you can look at some of these that you're familiar with, like AutoNation. Looks like you're going to get thing. Click on AutoNation N down here. Yeah. Okay, so here's a triple top. So AutoNation keeps coming up here to this 184 level and can't quite get through there. That's strong resistance. If it gets through there, you're going to attract a lot of new buyers, especially investors that are short that stock are going to say, let's get through this thing. As you can see over here, this little spike higher, whether it was earnings or whatever, that was out of a double top breakout there. You had the 2X's, and all of a sudden you had this big spurt from 184 up to 196. You had about a 12-point run in there before it reversed. That was a breakout. A lot of times when you get these breakouts, you'll get a spike in a long string of X's to go forward. If you look back going through there, several spots on here, back here in the middle of the chart, you have another double breakout and went from 168 up to 180. So when they break through these formations, demand and supply areas of resistance supply, you can get quite a nice run off of these things. Again, because a lot of investors that are short realize that they better cover in that area. And if you're not using that, I would take a look at that. Let's go back to that point and figure. Go back to the advanced tools again. And let's look at the early alerts. Okay, now go ahead and go down this page a little bit. And what I do a lot of times is I will look at some of the different things in here. Click that up so maybe you can get like 100 stocks or 50 stocks. Yeah, 60, whatever. But what I will go down through and look at these things sometimes, and I will look to see an industry, because a lot of times you don't know it, but a lot of times what happens is you'll look at this thing and all of a sudden you'll see, wow, there's 8 banking stocks that are getting ready to break out of a triple top or a double top, or there's 5 or 6 or 7 semiconductor stocks that are getting ready to break out of a double top or triple top formation, or maybe restaurant stocks. And if you look at that, that means that not only are maybe a stock that you're looking at is getting ready to break out, that means the whole industry is breaking out. And that's really a big sign for you to say, okay, I'm looking at this. All these stocks are getting ready to break out in that sector, that industry. That's something you want to know, because that means there's a lot of buying going on across the board, not just one oil stock or one restaurant or something like that. If you look on there and you see, Domino's and Brinker and all these other restaurant stocks, Wendy's, whatever, that means that there's a lot of money going into those things, and that whole industry is going to break out of a pattern. And that's very, very bullish. And that's a good early sign to you that you want to be in that group, because the whole thing is getting ready to break out. So you should get in the habit of just looking at that maybe once a week, over the weekend or whatever, and just try to pick up things like that what you may not think about it, but at the top there's a Sotera Health company. If there's other health companies that are in there, that's something that you may want to look at and say, okay, maybe the health sector is something that's going to break out. I want to be involved in that. So that's just a way that you can use that point and figure early alert and alerts, on a weekend or something like that, just to get some trading ideas. And that thing has been in use for hundreds of years. In fact, I think it started with the old Chinese rice traders used to use that. That's how they would chart where prices were going with the X's and O's, and they would use that. Prices were going up, they would put their X's on a little chart, and when they have a reversal, a $3 reversal, then they would go into the zeros and start putting them that the trend was down. So that supply and demand type of charting is the oldest type of charting, I think, in the world. So it's been around. There's a reason why it's been around. It works.
Wow, David, that was extremely helpful. I feel like point and figure charts have been something I've always struggled with fully understanding, also utilizing. So I really appreciate how you've broken it down and just shown also where we can find it on the site. In college, I took a class where I had to draw my own PNF charts, and it was just a disaster. I never seemed to get it right. So I appreciate you breaking it down, making it something that we can understand.
And if anybody has some questions about that, send them to Carla, and we can always dig deeper into that. Just as we just did with the early alerts, Carla, click on PNF breakouts above on the right-hand screen. And this is another one that if you go into, just like we just talked about with early alerts, you can do the same thing with this, and you can look at, Yum Brands, so that's food or healthcare, whatever, insurance companies, whatever, semiconductors. And this will say, okay, well, these stocks broke out on Friday. So I want to be, they're already breaking out. Let me find one that's at an early alert, so I can buy something that's in an industry that's already breaking out with a bunch of stocks. So you're getting a laggard, but you're going to get something ahead of time that you can put your ticket in there, and when the breakout occurs, you're in.
To follow up, if you want to reach out to us, just send us a message here at the lower right-hand corner, support@marketedge.com. Let us know, your PNF question, and maybe it's something that we can cover on next week's or any future Tech Talk episodes. But David, we are actually running out of time. Is there anything else you'd like to add going forward for this week?
No, I'm thinking I'm good. Again, the big thing is going to be the JOLTS tomorrow. We'll take a look at that. But the big thing is employment report on Wednesday, which doesn't have quite the swing that the BLS does. But Friday morning before the open, that will probably be a market mover. You want to be, you probably want to keep an eye on that to see whether or not we're going to have a good October. But I just wanted to add one more thing as far as after that report. I do think, again, that you're going to see some choppy trading in October because of the election. But as far as what Wall Street, the election, I don't think a lot of them really care who wins. But as long as you have a split Congress, the Wall Street will be happy with that. If you would get more Democrats in there where they would take the Senate and the presidency, then you're probably going to have some problems, because then you're looking at higher taxes, especially on corporations. And that probably wouldn't be, Wall Street probably would not like that. So, I don't expect a lot of motion, a lot of upside or a lot of downside either way until we get into closer to the election.
Okay. Well, David, this was a great week. I learned a lot. So I do thank you for all the very helpful information. We do have to wrap up this week's Tech Talk Tuesday. We want to thank you to all of our listeners, and we will catch you guys next week.